things I think are going to respond violently to the upside once the fantasy from the Federal Reserve evaporates. And that would be gold mining shares. And I do own some Russian shares too.
The most significant results encountered for this Canadian mining region in over a decade. With a Canadian Mining Hall of Fame legend at the helm for more discoveries statistically than 1,000 geologists combined, this is the one hard asset stock to research right now. Learn more at crushthestreet.com/hardassets.
Hello, everyone, and welcome into crushthestreet.com. My name is Kenneth Amaduri, and I'm joined today with Michael Pento. He's with Pento Portfolio Strategies, LLC. He has a book entitled The Coming Bond Market Collapse, How to Survive the Demise of the Debt Market. And he's an expert when it comes to the economy. He's got a lot of analysis, and I've had the opportunity to listen to some of the other interviews he's done, and he's just got a wealth of knowledge and a lot of interesting facts that, you know, is very alarming if you're invested and if you just want to thrive in this new economy. So here, let's start off with China. The Chinese stock exchange, China's Shanghai Composite specifically, had a big correction this year. And guys like Jim Rogers are extremely bullish on China. What is your prognosis with China at the moment? Is this just the first leg down? And it's worth noting the Chinese stock market is actually up year to date about 50% roughly, even with that substantial correction. So let's talk about it.
Okay. Well, first of all, I wouldn't put any credence in what the Shanghai A shares are doing because they arrest people who put in sell orders or who short shares. And the government, through the People's Bank of China, is directly buying these shares. So I wouldn't derive any conclusions about the Chinese economy from the health of their stock market. The truth is that China has a GDP that was 55% investment, but it wasn't the kind of investment that you think would be productive investment from the private sector. It was non-productive fixed asset investment, mostly to build vacant cities and airports that don't have any planes. And the nation has suffered through a 250% increase in government debt in the last 8 years. So China is not going to seamlessly transition from a investment-based economy to a service-based economy because these people that were building this massive capital investment are now without jobs. So there's going to be a very messy transition if there's going to be one at all. You don't go from 50% of GDP in investment to a more balanced economy overnight and without any pain. So as a communist, it's a command and control economy, and it's not going to work. It's not going to have a very soft and gradual landing. And you can look at the commodity chart. You look at any commodity chart out there, look at Reuters, Jefferies, CRB Commodity Index, 19 commodities. They're telling you that the global economy is falling precipitously, and it's even in worse shape than it was in the very depths of the Great Recession in late 2008, early 2009.
When it comes to the global economy, how tied in are we? And I remember Peter Schiff making this popular, the U.S. or the rest of the world would decouple from the U.S. The U.S. is the problem. It's the root of all the evils. The central bank is printing up all this money. It's exporting all our inflation. So how are we going to see the rest of the world decouple, or are they worse off than the U.S.? Is the U.S. the safe haven?
Well, I don't believe there's any such thing as decoupling. I think 2008, the Great Recession, proved that. We weren't unaffected. In 2008, we were the nucleus of the problem, but our problem became Japan's problem. It became Europe's problem. It became China's problem. Now, what China did to combat that is, like I said, they ran up government debt by 250% to build unproductive assets. So we're having a global synchronized deflation and disinflation and recession. And I don't believe there's any decoupling. There's a very interconnected global trade system. We are a globally connected economy, and there will be no delinking or decoupling in my view.
What about the confidence in central banks? Is this popping around the world? The whole world is ran by central banks. And guys like Ron Paul, who talk about actually auditing the Fed or, eliminating the Fed, things like that. Is it too far out there to actually get rid of the Federal Reserve? Can the U.S. be a viable player?
Well, before 1913, we had the entire Industrial Revolution, the most prosperous period in America without a Federal Reserve, without a central bank at all. So the confidence in the Federal Reserve, I believe, is eroding as we speak. The Fed is threatening to hike rates for the first time in its history into a disinflationary environment. We have falling personal consumption expenditures. We have a global recession. We have rising junk bond yields and rising spreads between junk bond and treasuries. We have negative earnings and revenue growth on S&P 500 companies. We are in a earnings recession. And the Federal Reserve will be they're doing this, by the way. They're going to be hiking rates. I believe they're going to start in December. At least they're going to try to do that. But they want to do that for one reason, not because inflation is getting out of control. Inflation is only out of control in asset prices, in equity prices, and in bond prices. But they're doing so because they're uncomfortable at being at 0% for 7 years. That's why they're hiking. They're hiking into, as I said, disinflation, falling PCE inflation, a global recession, distress in the junk bond market, an earnings recession. And they're going to be hiking for the first time in history into the most significantly overvalued stock market in history. If you look at median P/E ratio on New York Stock Exchange listed stocks, they're at the all-time high. If you look at the total market cap as a percentage of the economy, it's the second highest in history. And the earnings are all mostly manifested by Wall Street shenanigans and financial engineering. Corporate buybacks, reducing the number of shares and boosting the earnings per share. So we're going to have what I believe in the next few quarters at most, a complete lack of faith in central banks. If the Fed cannot raise rates in December, a big chunk of that faith is going to be eroded. If they can't raise rates by June of next year or sometime in the middle of next year, then complete faith in central banks will be lost, because if they're not hiking next year, it's because the economy has already rolled over. And if they do start hiking, I believe they will exacerbate and precipitate the rollover in equities and the rollover in the economy. So we're living on the fumes of confidence in central banks. It's not work. By the way, I want to tell you that if you look at Japan, they're going into their third recession since Shinzo Abe took office in December 2012. Third recession. Europe is on life support, despite Mario Draghi buying tens of billions of dollars worth of assets per month. He's going to up that ante probably in December. But what you're doing is levitating equity prices, but you are not helping the underlying fundamental problem of the economy, which is the fact that we are on a global basis, debt disabled. We have too much debt. It must be written down. And the central bank driving a wedge between the lower class and the very wealthy is only making that condition much, much worse.
Michael, do you think that the Fed wants to raise it just so they can have some ammunition to lower it at a later date? And are they just...
I don't.
No, you don't think so?
I don't think.
And then
I don't think the Fed's raising interest rates. That wouldn't make any sense to me. I think the Fed wants to raise interest rates just to prove, because they're full of arrogance and hubris, they just want to raise interest rates because they want to convey to markets that they were correct, that the problem associated with 2008 credit crisis of 2008 has been solved and they're behind us. And they can't really claim that any longer because it's been 7 years since that crisis supposedly ended. And it's been 10 years since they've increased interest rates. So in order for them to continue with the fantasy that Wall Street is buying, they must start an interest rate hiking cycle. That is why they're going to do it. It wouldn't make any sense. Like I equate it in this fashion. If someone is dying or suffering from heat stroke, would you put a jacket on that person just so you could take the jacket off so they feel better? No. If the economy is suffering, the economy is suffering. Raising rates just so you can loan them does nothing. And I think the people at the Fed are at least smart enough to understand that. This is an illusion. It's a mirage. They're hoping against hope to be able to raise interest rates slowly and gradually and invade the markets and the
I just wanted to ask one last question, and that's how do you find value in these inflated bubble economies, these markets? How do you find value?
Okay, so what I'm doing now at Pento Portfolio, I do manage money there, so I'm doing a few things. Number one is I have very high levels of cash. I know it earns nothing, but I'd rather not invest and lose significant portions of my principal if I don't have to. I don't have to. So I'm 60% cash right now. I'm also about 20% of the portfolio short high yield debt. Because I think that's going to hurt. That's where the pain is going to be felt the most. As corporate debt becomes more and more distressed, you're going to see a big spread between treasuries and high yield. And that's where I want to make some money for my clients. And you talked about value. I have about 20% of the portfolio in the things I think are going to respond violently to the upside once the fantasy from the Federal Reserve evaporates. And that would be gold mining shares. And I do own some Russian shares too, because Russian shares are yielding about 4%. They have a PE ratio of 6. And those investments have suffered the most over the past few years. So I didn't buy them years and years ago. I didn't buy Russia for years and years ago. I bought it around the elite levels, the Russian ETF. And if you can buy something like that, you should profit greatly once the U.S. dollar rolls over, and it should roll over once the Fed acknowledges that it cannot raise interest rates. And that should happen in the next few quarters at the very least.
There you have it, everyone. That's Michael Pento with Pento Portfolio Strategies, LLC. Michael, thanks so much for coming on the show today. I really do appreciate it.
Thank you so much for having me on.